Okay, so are you ready to dive in? Today, we're tackling the EQAI Morning Briefing for September 30th. And,
Buckle up.
yeah, buckle up is right.
It's a wild one.
It is a wild one. Lots going on. We've got car companies sweating, a potential strike that could rock the economy, and even crypto is getting political. So,
Yeah, no shortage of things to talk about.
no shortage at all. So, where do we even begin, I guess?
Well, I think the overarching theme, at least from where I'm sitting, is uncertainty.
Okay.
You've got AMC. They're celebrating a pretty impressive debt reduction.
Right?
But then on the other hand, you've got this looming port strike, and everyone's freaking out about what that's going to do to, well, everything.
Yeah, no kidding. Okay, so let's break those down. Let's start with AMC. Their stock is actually up, which seems kind of crazy considering, like you said,
Right? How do they manage that in this market?
yeah. How does that even happen?
Well, they made honestly, some pretty gutsy moves.
Okay.
Renegotiating debts, leaning into the whole meme stock thing is
Yeah.
a good example of, I guess, finding opportunity where you least expect it.
So it's like they rolled the dice and came out on top. So what's the average investor takeaway from that?
I'd say the big one is diversification.
Yeah.
I mean, yeah, ANC's story is pretty unique, but it shows why you got to spread that risk around.
Don't put all your eggs in one basket.
Exactly.
Okay, so then the ports. The briefing mentioned a potential $4 billion
$4 billion a day.
a day hit to the economy. I mean, that's got to be like worst case scenario, right?
It's definitely a fight.
What would that even look like for, just the average person?
Well, think about everything that gets shipped. Clothes, electronics, you name it. That supply chain grinds to a halt. You're going to feel it. And not in a good way. Prices go up, shelves are empty.
It's like a domino effect.
Exactly.
And this isn't just about, boats and docks. This is global.
Absolutely. It's all connected.
Right. But the briefing also said that, like, some container stocks might actually benefit. How does it even work?
It does seem counterintuitive. But when you've got a bottleneck like a strike, the people who can get around it, they profit.
So some companies might actually be in a good position because of this.
They might. Volatility creates winners and losers, that's for sure.
Okay, so we've got potential chaos in the shipping industry, but some companies might come out on top. It's like, I don't know, a game of Monopoly or something.
Right. High stakes.
High stakes. Speaking of high stakes, Stellantis, they're the company that makes Jeeps. They lowered their profit outlook, and they're saying it's because of competition from China. So what does that mean if you're, say, thinking about buying a new car? So more competition usually means lower prices, right? Is that what this means?
Well, it's not quite so simple. Yeah, competition can drive prices down, but Chinese automakers, they're not just competing on price anymore.
Right, they've upped their game.
Exactly. They're bringing the tech, the quality, so companies like Stellantis, they have to adapt.
So it's like a wake-up call for the whole industry.
You could say that. Speaking of wake-up calls, this next topic is something everyone needs to hear. The briefing gets into personal finances.
Yeah, because this is the stuff that actually hits home, right?
It does. They talk about this person buried under $85,000 in credit card debt, thinking about dipping into home equity, even.
Ouch. That's rough. And with interest rates going up, like the briefing said.
Yeah, bond yields are up, which is bad news if you owe money.
Okay, can you explain that? Like, what does that actually mean for people?
Basically, it means borrowing just got a lot more expensive. Mortgages, car loans, even credit cards. Those rates are tied to bond yields. So yeah, if you're carrying a balance, now's the time to get serious about paying it down.
So what can you even do in that situation?
Well, you've got options. Balance transfers, maybe a debt consolidation loan. Talking to a financial advisor is never a bad idea either.
It's all about taking control.
Yeah.
Right. And speaking of control, the briefing mentioned buy and hold investing. They said it can actually beat the experts. Is that for real?
It's a strategy with a pretty good track record, I'll say that.
So how does it work?
The idea is you buy into solid companies, good fundamentals, and you hold on to those investments for the long haul.
Even when things get rough.
Especially when things get rough. It takes patience, but history shows it can really pay off.
So slow and steady wins the race.
Exactly. Like a tortoise.
Okay, so then how do you know which companies are worth holding on to?
Well, you got to do your research, look at their earnings, how competitive they are, that sort of thing. Or you can go with an index fund, a little less risky.
So diversify, think long term. Got it. Now, going back to AMC for a sec, it's kind of wild that they're considered a bright spot, right? I mean, we were just talking about their debt.
It's interesting, yeah. Despite everything, their stock is climbing. Market's a funny thing.
It really is a real comeback story. Okay, so KinderCare is planning an IPO. What does IPO even stand for again? It's like it's their coming out party,
Yeah,
right?
exactly. They're basically saying, hey, we're ready to be a publicly traded company.
Okay, so they're trying to like grow and expand, but
Yeah.
then you've got companies like AT&T. They're selling off DirecTV. It's like, what do they see that AT&T doesn't?
That's a great question. And it kind of speaks to this whole trend of strategic divestment, I think they call it. It's
Yeah.
like, cleaning house,
Right.
getting rid of the stuff you don't need anymore so you can really focus.
So AT&T is like simplifying, and KinderCare is saying, now's our time to shine, basically.
Something like that, yeah. They probably see a real opportunity in the market.
Interesting. Okay, so NEO, their stock is way up.
Big investment deal.
Yeah. That could be good news for China, right? Their economy is supposed to be,
Well, not so fast.
Okay.
I mean, it's one deal. Doesn't necessarily mean the whole Chinese economy is about to take off.
Right, right. It's like one sunny day doesn't mean summer's here.
Exactly. You got to look at the bigger picture.
So what else should we be paying attention to?
I think JP Morgan summed it up pretty well at the end there. They're saying be careful with emerging markets, at least until after the election.
Yeah, that seems like pretty standard advice. Don't rock the boat.
Right. But then again, sometimes the biggest rewards come with a little risk.
It's that balance, right?
Yeah.
Playing it safe versus like going for it.
Exactly. And at the end of the day, you got to make the choices that are right for you. That's what it all comes down to.
So true. Well, that's another deep dive in the books. Thank you for breaking it all down with me.
Anytime.
And to all of you listening, we want to hear from you. Were you surprised by anything in this briefing? Do you think playing it safe is always the right move? Head over to our social media and let's keep this conversation going. Until next time, happy investing.